On today's Fun Facts, we'll be talking about how to evaluate investment performance. I'm Wes Walker, full-time fiduciary in the Louisville and Lexington offices, and I'm joined by
Trey Jurgens. I'm full-time fiduciary here in the Louisville office.
So the subject matter today, Trey, we're basically wanting to talk about how does someone compare their performance in an investment account, and what should they look for as they look at their statements that they get from their broker or financial advisor?
Yeah, so this is a phone call. I know you get probably 12 times a day or more. It's that, hey, Trey, just want to see how things are going. They want to have something to base it off of. And what we do in our income planning, we take very realistic assumptions. We're not going to tell you we're going to get double digits every year because we know what the market's done historically. But when it boils down, people want to hold something up against a benchmark. A benchmark is something to just base what you've made off of what something else has made. Something historical with a lot of data. So speak a little bit to a benchmark, but also how we truly tell our clients how their funds are performing.
Sure. So a benchmark is just, like you said, a way to compare your performance against something else. If you were running a portfolio of all stocks, you might benchmark your performance against the S&P 500 or the stock market more broadly.
Sure.
Really, what we do or try to do in our performance reporting is not so much to benchmark ourselves against major indices or other mutual funds or that sort of thing.
Yes. Because savers aren't chasing that kind of return typically.
No, all they're looking for is a worry-free retirement and to be able to spend this money, use it, and enjoy it for the rest of their lives. So in our reporting, what we focus on is just clarity. We show the returns net of fees after we've charged our fees, which is very important. A lot of statements from other firms and other mutual funds don't include the performance net of fees. They'll show it gross of fees. So it's a little bit unrealistic to show those kind of returns when they're not actually happening in true economic senses.
Yeah, makes sense.
So in sum, really the big differentiator that you should be looking at when you're looking at investment returns is how has it performed relative to your expectations. So if you're going to be a conservative investor, are you invested conservatively and are you getting adequate returns from that? And are the fees and returns that you're seeing on statements, are those in true economic reality?
That makes sense. Thanks so much.
Thanks, Trey.